It's earnings season, time for anxiety and excitement. Today, I'm going to talk about two of my favorite stocks in the stock market, AMD and PayPal's Q1 2024 earnings. Let's get into it. But first, Shamao, right here, says to like and subscribe. But yeah, I'm doing PayPal, AMD, Shamao, says to like and subscribe. Okay, so yeah, PayPal released their earnings results actually before ours. That's why you see the jump, early in the morning. So PayPal's up 2.03% today to close at $68.35. Now, the thing about PayPal is that they are so cheap. Look at that trailing PE, 17.45. That is priced for zero growth. Zero growth. Forward PE, 13.09. That is just zero growth. It's insane. I'm looking at Coca-Cola, a company that's actually doing zero growth, and their trailing P is 25. So that just shows you exactly what's going on in the market for PayPal. Now, PayPal's expectations were EPS of $1.36 and revenue of $7.51 billion. EPS is expected to go up 9.7%, revenue up 6.8%. Now, the thing is, for EPS, this is pre the change. PayPal's actually modified their non-GAAP EPS results, and what they're doing now is they're including stock-based compensation, which gives you, I think, a more fair take on what it means to us as investors. So this number was pre that change. So that's why in the next screen we see the actual results. It's going to look a little different. Okay, so yeah, the Q1 results, the total payment volume was $403 billion. That's up 14%. That is huge. That's growth. It's huge growth, especially for a company this large. Nearly $500 billion in payment volume, and they're primarily online. PayPal does primarily online, branded and unbranded checkouts. Revenue, $7.7 billion. That's up 9%. Transaction margin actually increased 4%. That's partially due to the restructuring that they did earlier this year, layoffs. Non-GAAP EPS is $1.08, which is up 27%. Now, that's actually also a beat, but it doesn't look like a beat. As I mentioned before, this now includes stock-based compensation. The next quarter, analysts should be able to give a more accurate reading on what they expect for next quarter. Free cash flow, $1.8 billion, which actually matches the share buybacks. And that's the thing. PayPal is expecting to do $5 billion in share buybacks this year alone. Now, why is that a big deal? It's a big deal because their market cap is only 60-something billion dollars. So like 8-9% of their entire market cap, they're buying back in shares this year. So that's a huge boost. That greatly boosts their earnings per share. And that's one of the reasons why EPS is actually so high, is because of these share buybacks. Okay, so Q2 expectations are revenue of 6.5 to 7%. Non-GAAP EPS is going to be in the low double digits. That's what DD means. For the full year, non-GAAP EPS is expected to be mid to high single digits. That's what SD means. Free cash flow, $5 billion and $5 billion in share buybacks. So PayPal's a strong company, and they're getting stronger. Okay, so just to give you an idea of what's going on with earnings per share, these were all adjusted actually for the stock-based compensation. So these are all like results now. So as you can see here, growth actually was stalling in Q3 of 23, a couple quarters ago, where it grew only 8%, but it is accelerating again, up 15% last quarter, and then up 27% in Q1 2024. So growth is re-accelerating at PayPal. And that's due to both the top line increasing and also the stock-based compensation. So on the conference call, Alex Chris spent a great deal of time talking about their growth initiatives and what they are focusing on. He said that the focus is on branded checkouts. He says that branded checkout's been sort of weak in recent years, and the focus is on that. And it's also a higher margin component of the company. They're also concentrating on profitable growth, and Fastlane user conversions are at 80%. And a couple quotes from the earnings call. Alex Chris says, "We continue to focus on accelerating growth in branded checkout and driving the profitability of our business. We are executing to get upgrades to our core branded checkout experiences to the market." PayPal's newly appointed management is also aiming to win back investor confidence through measures to turn leaner and by focusing on profitable growth, which Alex Chris noted a lot during the call. Chris said PayPal has worked to instill cost discipline and is leaving no stone unturned when it comes to reducing unproductive costs. While the turnaround will likely take time, we believe long-term opportunities remain substantial as the company has evolved from a traditional checkout button to a robust platform of end-to-end solutions for consumers and merchants, said William Blair analyst Christopher Kennedy. Actually, let's go back a couple of screens. I forgot to mention something. Okay, so yeah, the comments by Alex that came with the call. He said, "We delivered a solid set of results in Q1, and I'm encouraged by the progress the team is making against PayPal's go-forward strategy and in strengthening our foundation. 2024 remains a transition year, and we are focused on execution. Driving our key strategic initiatives, realizing cost savings, and reinvesting appropriately to position the company for consistent, high-quality, profitable growth in the future." Alex Chris, President and CEO. Now, does this look like zero growth to you? This stock is mismatched to the price of the stock. As I mentioned, this stock is priced for zero growth. This is not zero growth. This is fantastic earnings per share, up 27%, which is huge. It's just huge. Yeah, so the thing is, back in January, Alex Chris mentioned 6 things that they are working on to drive revenues during this transition. They're working on these 6 items, and then after this transition, this is going to help accelerate growth in 2025. Now, some of these are actually in place right now. For example, Fastlane's already there and being sold to merchants. End users are using it. And it's actually driving. Fastlane is one of the items that helped drive results this quarter. Other things they're doing is transforming the checkout experience. Smart Receipts, which is AI-driven recommendations on the bottom of your receipt. An advanced offers platform. A reinvented PayPal app. And also Venmo business profiles. So these are the things that they're working on. These are what they're focusing on. So for PayPal, this is a great earnings report and a great earnings period. So Q1, they did great. I give it an A, I guess. It was good. I don't really have any complaints. Moving on to AMD. Okay, so the thing about AMD is AMD, the bar is set really high by analysts and investors because AMD is core to the AI growth. They're sort of tied to the hip to AI. If they execute really well, they're expected to execute really well because of artificial intelligence. And if there's any sort of a slip, their stock's going to crater huge if there's any slip in artificial intelligence. Because Lisa Su herself said that it's expected that AI CAGR is going to grow 70% over the next 3 years, from 2024 to 2027, with an AI CAGR in 2027 revenues of $400 billion, which is actually about the same as the iPhone. So it's expected to be huge. But again, AMD is not the only player. NVIDIA is actually the gorilla in the corner. There's other competitors like Intel and custom-made solutions and all sorts of different things. But anyway, yeah, AI is the core of AMD's growth, and they need to execute in this area. And this is the most important thing for them. And their entire focus is on artificial intelligence. And they actually released the MI300, their inferencing chip, in Q4. So as you can see, after hours, AMD dropped 3.71%. Is that warranted? Let's find out. AMD has a trailing PE. Actually, let's look at the forward PE of 48.08. So again, they're priced for growth, and they're priced for strong growth, as I mentioned. So yeah, expectations from analysts for earnings per share of 61 cents and revenue of $5.45 billion, down 9.1%. Okay, so Lisa Su mentioned in the earnings results, I'm just going to read it for you. She said, "We delivered strong first quarter results with our data center and client segments, each growing more than 80% year over year, driven by the ramp of MI300 AI accelerator shipments and the adoption of our Ryzen and EPYC processors," said Lisa Su. "This is an incredibly exciting time for the industry as widespread deployment of AI is driving demand for significantly more compute across a broad range of markets. We are also executing very well as we ramp our data center business and enable AI capabilities across our product portfolio." And then Jean Hu, their CFO, said AMD started the year strong, delivering record quarterly data center segment revenue. In addition, we drove solid gross margin expansion. Moving forward, we are well positioned to continue driving revenue growth and margin improvement while investing in the large AI opportunities ahead. Revenue growth in data center client segments was partially offset by lower revenue in gaming and embedded segments. We'll get to that in just a second. So the actual results were revenue of $5.5 billion, which is a slight beat, up 2%. Gross margin 52%, which grew from 50%. Net income $1 billion, and EPS 9 GAAP earnings, of 62 cents. Now, AMD's results are a tale of two cities, and I'm going to go through that in just 1 second. So this is what's going on with AMD. And data center, which is the AI segment, data centers, AI, Ryzen, and other things. Client is their client's CPUs. Gaming is obviously their GPUs, as well as PS5, Xbox. And then embedded is essentially their Xilinx, which is FPGAs and other such things. So as you can see here, it really is a tale of two cities. Okay, so AI and data center and Ryzen all did excellent, up 80%. And their operating income is up 266%. Which is a huge increase. Now going to client's up 85% in revenues, operating income up 150%. Gaming, however, is down 48%, and embedded is down 46%. Okay, so the reason why gaming is down is because gaming is very cyclical. The PS5 and the Xbox are actually on the later half of their cycle, and for the next I would say the next 2 years or so, as those two systems wind down, these numbers in gaming are going to continue to decline until the next systems, the PS6 and the next Xbox, come out. So that's what's going on there. And this also affects the GPU sales, because the GPU sales are tied directly to the console market. And the games are also kind of segmented that way as well. People are sort of building their games for the next generation. Now, embedded is down. We'll go over that in a second. Okay, so going back to data center, it says records data center GPU sales of the MI300 surpassing $1 billion in cumulative sales since Q4 2023. And we discussed the rest of these numbers. Okay, so yeah, the gaming segment is cyclical. And it's due to lower semi-custom. Semi-custom is the PS5 and the Xbox system. And way down GPU sales. So this will go back up in the next console generation. So it is what it is. And it was expected. So for embedded, the reason this is down is because of heightened inventories at their customers, which are going to be fixed. So this is a temporary issue, and this will fix itself soon, probably in the next quarter or two. So the outlook is revenues of $5.7 billion in Q2, gross margin 53%, operating expenses $1.8 billion, Tax rate 13%, diluted share count $1.64 billion. Now, for AMD, it's kind of like a puts and takes, push and pull. Like I said, one segment is scour. So for AI, AMD is doing great. Up 80% data center is an awesome result. But then the other two segments are kind of cyclical. Gaming is down, and FPGAs are down. But client is doing excellent. So I give AMD's results a C. Half the business is doing excellent. Half the business is going through a downward business cycle. So yeah, I give the results a C. The company's doing very strong. I expect strong results in the quarters ahead and in the years ahead. And Lisa Su's doing a great job running the company. So let me know in the comments below what you think of AMD and PayPal for that matter. And Shamo says too, like and subscribe. Thank you for watching, and I will see you in the next one.